Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, May 28th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Now, we will come back to this chart in just a couple of minutes, but I want to start off with a weekly chart of the S&P 500 to really focus in on what has happened here this week and kind of get the big picture, and then we'll go back to that shorter-term chart here in just a couple of minutes. Now, this chart is a weekly candlestick chart of the S&P 500 that goes back to the beginning of 2021. The green line is the 10-week moving average. Of course, that's very close to the 50-day moving average on a daily chart. The blue line right here is the 4,200 line. And first off, we were up 1.16% this week on the S&P 500. And we closed at 4204.11. Now, that makes this week the second weekly close above 4200 on the S&P 500. So this is only the second time in the entire history of the S&P 500 where we've had a weekly close above 4200. The highest weekly close was about a month ago. That's right here, okay? So, the market continues to hang in there. We've kind of went sideways basically for about 5 or 6 weeks here, just not making a ton of progress. And obviously the last 2 weeks prior to this week, the last 2 weeks were negative, and we did have some trading beneath the 10-week moving average in both of the last 2 weeks. But the last time we had a weekly close beneath the 10-week moving average was clear back in February right here, okay? So the market continues to be incredibly resilient, and, as they say, let the trend be your friend and don't fight the trend. So for right now, guys, the trend does appear to be upward and onward, and didn't make a ton of progress this week, but after 2 weeks of selling, we had a nice positive week, up 1.16% on the S&P 500, and the second ever close on a weekly basis above 4,200. The next chart that we're going to look at is a 30-minute candlestick chart of the S&P 500 that starts back on the very last trading day of April. I started back there just so we could see where we came into the month of May. I do want to start off right here, though. This was the very first 30-minute candle for the month of May, and if we move to the right here, you can see that we finished up about where we started right there in the month of May. We made a little progress for the month, but you can see there was a lot of volatility, right? We sold off first part of the month there, and then we got above this 4220 level, held it for about a day and a half, sold off, went clear down to 4060, bounced up to this 4180 line, got rejected right there, deflected back down, went right down really close to that 4060 level again. Interestingly enough, 2 Wednesdays in a row, probably more of a coincidence than anything. And then last week, we got up to this 4180 level again and had one 30-minute candle right there on Friday that closed above it. And then we sold off and closed towards the lows of the day on Friday, but we still stayed above this 4148 line, okay? So the important thing here for this week, okay, is that starting with the first 30-minute candle for this week on 5/24, Monday the 24th, that candle closed above the 4180 level, which had been giving us fits. Again, we got rejected right here, right? And then, we only had the 30-minute candle that closed above that 4180 last week. But once we got back above this 4180 level this week, every single 30-minute candle this week closed above the 4180 line. So that again shows on a relative basis some strength, okay? So the fact that we had all of the 30-minute candles this week close above this 4180 level, that's a win, guys, because we really had never seen that before. Okay, so on a relative basis, the market continues to move up. Again, we were up over 1% for the week, not a huge week, but a decent week. And, we're getting closer to getting back to this 4220 level. And if over the next few weeks we can get above this 4220 level, and keeping in mind that we've only had about a day and a half, maybe a day and two-thirds of trading above this level on the S&P 500. So this will definitely be an area to watch next week, is this 4220 level. But also on the lower end, 4180, right? If we roll back over, start to trade beneath 4180, and especially on a daily basis, if we start to close beneath that, we know the market is once again rolling over and weakening at least a little bit. But if we can start to see some trading consistently above 4220, intraday as well as daily closes, that will let us know that the market continues to melt up, so to speak, and that will be really, really good news. Now, just to remind you, below 4180, the 4148 line, right? There's through the month of May here, there was quite a bit of trading, and especially right here, you can really see the support that this 4148 level provided, right, for a few days right here. And then below this, we have the 4120 and 4125 lines. And going clear back to the month of April, and we're not going to touch on that here. You can go back over some of my older videos if you really want to see how important this 4120 and 4125 level has been. Go back through the last 2, 3, 4 weeks, and you'll see videos on that. But if the market starts to roll over, these are the areas to watch. And then again, if we start to close below 4120, we can see that we've had some support throughout the month of May at 4060, and we did not have one 30-minute candle close beneath 4060. We tested the level, right, and we had a little trading right here on the 12th below that 4060 level, but none of the 30-minute candles closed beneath 4060, right? Flirted with it a couple of Wednesdays in a row right here on the 12th and then again on the 19th. But fortunately, we were able to bounce off those levels and move back up and make a little progress for the month of May. And even though we've got a couple more days from a calendar perspective, keep in mind that Monday, the 31st, is Memorial Day. It's a holiday. The market is closed. So today, Friday, the 28th of May, this was the last trading day for the month of May. Would you like to be a better, more successful, more knowledgeable investor? Watch the balance of this video to learn more. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors, and what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how simple market signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then of course the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how simple market signals could have helped you during that time. With simple market signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios, and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule. And the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition. So whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least one or two emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this, because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly emailed newsletter, which goes out on the weekends, that will include all of the content that we just talked about. Plus, you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.